Hey everyone, welcome back to Corporate Decoder, the place where we unpack the world of business and give you the real story behind the numbers. Today we are diving deep into a major move by Elme Communities, a company that has just made some big decisions about its real estate holdings. Get ready because things are about to get interesting as they sell off a significant chunk of their portfolio. So Elme Communities, a Maryland-based real estate investment trust, decided to make a bold move on November 12th, 2025. They sold a big part of their business. We are talking about a deal where they offloaded an entire portfolio of properties. This was a purchase and sale agreement that they signed back on August 1st, 2025, and it was a massive transaction, the portfolio sale transaction. They sold all the equity interests in a subsidiary called EchoSub LLC to a buyer group which are affiliates of Cortland Partners LLC. The price tag for this whole deal was a cool $1.606 billion in cash. Now that is a serious amount of money, and it means Elme Communities is fundamentally changing its shape. Imagine selling off almost half your properties to get a fresh start or to fund new ventures. But here is where it gets even more interesting, to finance some of their ongoing operations and perhaps to bridge the gap after this massive sale. They also took out a significant loan. On the very same day, November 12, 2025, they entered into a loan agreement with Goldman Sachs Bank USA. This loan is for $520 million and it is a senior secured term loan. What does that mean? It means it is a top priority loan that is secured by the properties they still own. Think about it this way, they sold off a part of their business, but the remaining properties are now the collateral for this huge loan. These properties are listed as Riverside Apartments, Elme Bethesda, Elme Germantown, Elme Hawkins Mill, 3801 Connecticut Avenue, NU, Kenmore Apartments, Elme Conyers, Elme Marietta, Elme Sandy Springs, and Watergate 600. These are the crown jewels they kept. The loan agreement also includes pledges of all equity interests in the borrowers which are indirectly owned by Elme Communities. Now let's talk about the cost of this loan. The interest rate is tied to something called the 1-month term SOFR plus a spread. The spread starts at 2.25% and can go up over time to 4% if the loan is extended. They also bought something called an interest rate cap to protect themselves if interest rates skyrocket, which effectively caps term SOFR at 5%. There is also a duration fee due in February 2026 and an exit fee if they repay the loan early or at maturity, which is November 9th, 2026, unless certain conditions are met, like refinancing with the same lender or selling properties. A key part of this loan structure is a restricted account where all the income from the collateral properties will be deposited. This money will first go towards paying things like property taxes, insurance, debt service, and lender-required reserves. Anything left over can be used for general administrative expenses, but only up to certain limits. This is a way for the lender to ensure they get paid first. Any excess cash after selling properties and paying off the loan release price needs to go into this restricted account, unless certain conditions are met, which basically means they need a healthy buffer and good financial performance to get that cash. With all these new arrangements in place, Elme Communities also had to wrap up some old business. On the same day, November 12, 2025, they paid off and terminated 3 existing credit agreements and a note purchase agreement. They also said goodbye to their 7.25% senior notes due 2028. They are redeeming all $50 million worth of these notes. They've deposited the funds to cover this redemption with the trustee, so those old debts are officially cleared. It sounds like they are cleaning house to make way for this new strategic direction. Let's circle back to that big property sale. The introductory note tells us the portfolio sale transaction closed on November 12, 2025. Before this sale, EchoSub held equity in a bunch of multifamily communities. We are talking about a significant list of properties all over Virginia and some in Georgia and Washington, D.C. This sale really reshapes how Elme Communities looks structurally. Imagine having a list of 19 properties just disappear from your balance sheet. These properties included places like Cascade at Landmark in Alexandria, Virginia, Claiborne, also in Alexandria, Elme Alexandria, Bennett Park, Park Adams, the Maxwell, the Paramount, the Wellington, and Trove, all in Arlington, Virginia, Roosevelt Towers in Falls Church, Virginia, Elme Dulles, and Elme Herndon in Herndon, Virginia, Elme Leesburg in Leesburg, Virginia, Elme Manassas in Manassas, Virginia, and the Ashby at McLean in McLean, Virginia. On the Georgia side, we see Elme Druid Hills, Elme Cumberland, and Elme Eagles Landing. And finally, Yale West in Washington, D.C. That is a substantial portfolio indeed. The new loan we discussed is a direct financial obligation, and it's a big one. $520 million is not pocket change. It's a significant commitment that will impact their balance sheet and cash flow for the foreseeable future. Interestingly, they mentioned that this closing constitutes a change in control under various company compensation plans for both officers and non-officers. However, they also stated that the company's trustees prior to the closing will remain the trustees after closing, and there will be no change in the ownership of outstanding common shares. This suggests that while the business structure has changed significantly at the operational asset level, the leadership and overall ownership structure might remain stable for now, which is an interesting dynamic. To keep everyone informed, the company also issued a press release on November 12, 2025. This press release announced the closing of the portfolio sale and the details of the new loan agreement. This is standard practice to ensure that all investors receive the same information at the same time. Now, typically after such a big transaction like this, they would file pro forma financial statements. These show you what the company's financials would look like after the deal has happened. The filing indicates that these unaudited pro forma financial statements will be filed by amendment, so we will have to wait a little longer to see the complete pro forma picture. We have a few exhibits attached to this report. The purchase and sale agreement itself is incorporated by reference from a previous filing. The new loan agreement is filed as Exhibit 10.1 and the press release is Exhibit 99. On AIM. They also noted that certain schedules and exhibits have been omitted because Elme Communities agrees to provide them to the SEC upon request. This is common practice to keep the main filing from becoming too bulky. So what does all this mean for Elme Communities? On the surface, they are making a strategic pivot. They are selling off a significant portion of their real estate portfolio. This could be to deleverage, reduce complexity, focus on core assets, or to free up capital for new opportunities. The massive cash inflow from the sale combined with the new debt financing suggests a strategic repositioning rather than a distressed sale. The immediate use of funds is not explicitly detailed beyond paying off existing debts, but it is likely aimed at strengthening their financial position and potentially funding future growth or development. The key risk here is execution. Can they successfully manage the remaining properties and service the large new loan? They have secured a significant amount of capital with the asset sale and now have debt service obligations that will need to be met consistently. The terms of the loan, including the increasing spread and exit fees, indicate that the lender wants this loan repaid. The strategy of selling properties to repay this debt is a common one in real estate, but it relies on strong market conditions for property sales and prudent management of the remaining assets. The fact that they are redeeming their senior notes early also signals a move towards simplifying their capital structure and potentially reducing interest expenses if the new financing is more favourable, or if they believe rates will rise. Looking ahead, Elme Communities is clearly trying to navigate a significant transition. Their future success will depend on how well they manage their remaining portfolio and whether this bold move to sell assets and take on new debt sets them up for sustainable growth or introduces undue financial pressure. It is a high-stakes game of real estate finance, and we will be watching closely to see how this all plays out. Alright, that is our breakdown of Elme Communities' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.